Okay, welcome back. So what, 5 points? So it's absolutely flat at this stage. Nothing going on very much. 22,972 is where we are at. Aditya Sood is with us, portfolio manager at InCred PMS. Aditya, good afternoon. Good to have you with us here. Thanks very much for your time. The question many are asking us is, what's the best way to sort of play the upside post 4th of June? If the numbers are what the market wants them to be, is it PSUs? Is that the pack where there'll be a sort of lot of action? Is it something else? How do you think about that if you do think about that?
I think so. We are at a very interesting juncture in the market, right? Because if you look at positioning today, we have seen a fair bit of FI selling going through. Incidentally, it has coincided with the MSCI China doing well. 17-18% up move on MSCI China. So if you talk to GEM managers, essentially, there are a lot of FIIs who don't want to take the election risk. And, once the election risk is behind, possibly, there could be a bit of reversal. Now, the good news is that, with such heavy selling, which has gone through, possibly mean reversion and FII flows would be watched, keenly. And that is how we are trying to position ourselves in stocks, wherein FIIs can, possibly come and buy. So that is one bit of the market. On the domestic side also, I think so there is fair bit of cash which is sitting in, MFs apart from, what we get from the SIP flow. So this is a perfect recipe wherein possibly, if you get a positive surprise, stocks can do well. But our approach typically has been to focus on something which has not done well in the past. And what we are seeing is that, increasingly in this market at an elevated level, people are becoming, value seekers. And wherever you see value getting, if you see an element of surprise coming through in terms of, the numbers getting reported, you are seeing, fair bit of re-rating happening, fairly quickly.
But where that answer I'll come to. I know your approach has been to kind of sort of find stuff which is not done well. Absolutely the right way to go about it. But for once, if you can put that momentum hat, where will what looks primed for that sort of bursting through the gates higher if you get that surprise 4th of June?
I think so. Momentum has to be looked in conjunction with under ownership of both DI and FIs. So at an elevated level in the market, if you find a stock wherein, there is no institutional ownership and, you see earnings momentum trending up. And this is what we have seen across our various stocks that we hold in the portfolio.
Sure. These are not recommendations.
I'll just taking a cue from, hospital discussion that you were having. So for example, if you can find a stock, which is under-owned and trades cheaply, stocks can be, up 30-40% within no time.
No, but just to press on that point, Aditya, you said that you're looking to position where perhaps there's a greater chance of FPIs increasing their ownership. So does that logically come back to large caps like banks? I'm just going for the most obvious sort of guess over here. But beyond that, what could be the areas you're looking at to play that under ownership sort of strategic tactical move?
So if you look at, certain baskets in the market, FMCG is something that I have been constantly highlighting for, I think, so last 2-3 months. We find consumption as a basket, which is under-owned by most, at this point in time. So what you are seeing is that, there is a divergence between rural and urban, which has started to play out, which is there in the data now. Slowly, if you look at Marico, HUL, Dabur, most of these companies are doing well. MNC Pharma is a very, very interesting space. So most of these MNC companies have been trading at, possibly a 10-year lowest multiple. Now, what we are seeing here is that the growth is, trending upwards. So if you look at, Pfizer, for example, they had, a lot of drugs which were impacted by NLEM. And obviously, you have a favorable base there. So if you look at, GSK Pharma, for example, the top line growth has been very, very tepid for last 10 years, possibly. And this is the first quarter wherein we have seen a earnings beat. So that these are some of the areas which we find interesting, and obviously they are not very widely represented in portfolios.
Okay, all right. Hi, Aditya. I'm looking for some names. We've got the broad idea, looking for underperformers, looking at some FMCG stocks, MNC names as well. Give us a few names. You know, the last time you joined us, you gave us a couple of names. I think we spoke about KDDL, Landmarks, ABFRL. What else? What's new?
So the top holdings that we have in the portfolio is a combination of, going by this theme, we have been a very long-term buyer in a company known as Newland Labs, which obviously is perhaps one of the best performing pharma stocks, post the COVID low that it made. We find that Newland is clearly a very, very unique story. Innovation quotient is very, very high. There is a huge tailwind of, essentially a biosecurity security bill getting passed in the US. And now it is going to, I think so, it is much clearer because, after tariffs getting slapped on auto and solar, it is very, very clear that, for innovation, US would see, Indian companies as a perfect partner. So if you look at a company like Newland, they were already supplying to a company known as Karuna Therapeutics, which had been acquired by Bristol Myers Squibb. So what we essentially see as an extension of this thesis is that, these companies have proven capability. They have a 40-year track record, which is impeccable track record in terms of US FDA. So these are, some of the themes wherein tailwinds are there. Tejas obviously has been a long-term holding for us now. I think so there was a fair bit of surprise on the numbers per se. And that is why, the stock has seen such a huge re-rating in the last quarter itself, right? Because people never believed that the BSNL tender would be margin accretive for them. But what they have demonstrated in the past quarter is essentially that gross margins have been reverted. And obviously, there was an element of semiconductor cost getting built into gross margin. So what we have seen is that, they have reverted to 13% EBITDA margin. And now with this telecom, capex story picking up, we do believe that Tejas has a very, very bright chance of possibly, extending the BSNL contract to a Vodafone Idea as well. So that is a very interesting way to play indirectly the telecom story without getting exposed to the balance sheet risk. And the third company that we have in the portfolio is the Intellect Design Arena, and our long-term structural call on this company has been that margins would trend up. In the last quarter, what we saw was that obviously, they vacated the GEM contract and top line was tepid, but that was widely expected. If you look at Oracle versus Intellect margins, there is a very large differential. Oracle is at 40-45%. Intellect, we believe that, possibly 21-22% margins can head towards, 30% over a period of time. There are, product companies generally have a lot of operating leverage built in. So these are some of the structural plays that we like. More importantly, we like companies which are challengers or the companies which are having huge tailwind and are gaining market share structurally.
Aditya, these are stocks that you've had in your portfolio for a long time now, whether it's Newland, Tejas, Intellect Design Arena. Any new stocks that you have, bought recently or you're evaluating right now?
So there are very few stocks that we have resorted to, add in the portfolio. I think so it is about more about sizing as a play in the portfolio. But what we have added recently is a very small hospital known as Indraprastha Medical. Now, if I look at this hospital, if I have to just benchmark them on valuation, obviously, this is a PPP between Apollo and the government of Delhi. So if you look at this hospital play, essentially last 30 years, they have been into existence. They have got an excellent reputation. Stock was trading very, very cheap. They have reported a 125 crore PAT. When we bought it, the market capitalization was 1,500 odd crores with 250 crores of net cash on the balance sheet. This was the cheapest hospital play. More interestingly, this is the one of the highest return on capital employed hospitals that you can, invest into, because the return on capital employed is northwards of 32%. Now, the real reason why the Indraprastha was possibly cheap was they have not expanded over the last 30 years. But as we understand, possibly, this cash flow accretion would lead to, some sort of expansion or increasing their bed capacity by 40% over a 2-3 year period. So what we have seen is that, any stock which has been categorized as value, as and when growth returns, there is a massive re-rating potential. So as a core thesis, we like companies wherein P multiple can expand and earnings can also compound.
They just have one hospital, right? That one in Delhi. Just that one hospital.
Yeah, that is correct. They have got 750 beds. basically.
Yeah, no, it's one of the oldest ones.
So one of the things that
no,
one
the
of the
market
things
cap
that
is now
we-
2,200 crores. You said you bought it when the market cap was 1,500.
Yes.
Just to press that point, for someone who wants to own a hospital business now in their portfolio, is there something which makes sense? We had an earlier guest who was saying that he likes Narayana. Your thoughts, Aditya?
Yeah, Narayana has been an excellent company. See, the problem with the sector today is that, a lot of companies, lot of hospitals are trading at, anywhere between 25 to 35 times or 40 times EV by EBITDA. So if you just logically step back and think about, the RPOB, the return on capital employed, the cash flow that it makes, it is very difficult to buy a hospital stock today based on cash flow, right? Because most of these stocks are expensive. So what we are trying to do here is that, we are trying to strike a balance between growth and buying it at a reasonable price, because any which ways the multiples are known to the market, right? So it is more from a perspective of, if I treat Indraprastha as quasi-government and half as, Apollo subsidiary, and if Apollo is trading at 50 times earnings, obviously, the stock is mispriced. Narayana is an excellent franchise. I have held, Narayana in the past. But we also own, DM Aster here. We believe that after the capital allocation move that they have made, possibly, the expansion which is going to come through is going to be 15% CAGR in terms of bed addition for them. And at a 40,000, sort of a RPOB number, I think so, they have got some headroom in terms of expansion of RPOB and expansion of margins as well.
Okay, so Indraprastha and Aster DM, two hospital stocks in your portfolio. Got it. Aditya, good conversation. Thank you very much for all the specifics and all the perspective. Wish you a good weekend, and we look forward to the next call.